Why is that? When you say from Schedule 1, 2, or 3, you haven't gained very much.
So in terms of what are you looking to do? If you're looking for full legalization, right, you're still not going to get there with those schedules.
Hey everyone, welcome to this TDR Cannabis Exclusive. As we talk cannabis here today, a lot changing in the industry right now. So we want to bring in obviously some great thought leaders in the space. So we welcome in for the first time on the podcast. He's the CEO of Tilt Holdings, which trades on the OTC under the ticker symbol TLLTF, and the New York Exchange in Canada under the ticker symbol TILT. Gary Santo joins us. Gary, welcome to the podcast. First time. How are you?
Doing well. Pleasure to be here. Thanks for having me on.
Great to have you on. Where are you based out of, Gary?
Right now, I'm sitting at home in my house in Salem, Massachusetts. So we're spread out. Our corporate headquarters is over in Arizona. So I spend probably a week, a month out there. But then we have plant touching assets here on the East Coast in Massachusetts, Pennsylvania, and Ohio.
Oh, darn. Get to travel to Arizona, right? Once a month?
I know. I'm supposed to be going there next week. So it'll be a real tough sell, you know?
Yeah, exactly. Good time of the year, especially when you're in the Midwest and Massachusetts, but a highly competitive market to say the least. But let's first begin. Many know Tilt brands for its Jupiter vaporizer devices and CCELL wholesale products. However, you also have an array of non-vaporizer cannabis product brands and dispensary and cultivation assets as well. So this being your first time on the program, explain to our viewers what Tilt Holding is and what makes a difference, say, from its competitors in the markets which it serves.
Sure. We're a multi-state operator in the sense that we do have vertical operations in Massachusetts where we have cultivation, manufacturing, we do wholesale, and then we actually have 3 retail stores. In Pennsylvania, we do cultivation and manufacturing, no retail, but we sell wholesale. And then in Ohio, we just have manufacturing and we sell wholesale. And we're working on building out a partnership with Shinnecock Nation to have a facility available in Eastern Long Island. So I think what makes us different, though, is unlike typical MSOs where it's all about your own brand and your own sales per square foot and retail footprint, we really have been a B2B play. And that's taking a page out of that whole vaporization business. So Jupiter that you mentioned earlier, they've been selling B2B since they came into existence. They helped bring the CCELL technology, that ceramic core with a cotton wick, into the space, which was certainly a game changer for vaping in general. But sold to the MSOs, sold to the Canadian LPs, to the brands, and along the way created relationships with about 700 or 800 different brands out there. So it's given us a real bird's eye view as to who's doing what in which states, who's doing it well, which brands have been able to dig in and succeed. So when we thought about how do we build out the cannabis side, especially I came along in 2020, so a little late in the game to be playing, MSO. We thought that if we could actually take that piece and bring it over to the cannabis side where we own the vertical, whereas we don't really own the factory on the hardware side, we could actually have some fun and we could figure out ways to bring brands from the West Coast to the East Coast without us having to either buy the brands or develop the brands on our own. Lets them do what they do well, which is get out there, create the lifestyle, and create the in-market activations. And then we do what we do well, the production, the consistency, the regulatory, the distribution. So it's been a great partnership so far.
Yeah, I'd be curious to learn, branding is front and center right now. Profitability, less market share. It's all about profitability. Who would have thought, as we said before we started recording, that's probably the main objective for a lot of these companies right now. But if you had to predict biggest trends that investors could see towards branding here in 2023, what would they be?
It's got to be the move towards CPG. I mean, we were one of the first to talk about it in early 2021 because we saw that wholesale landscape starting to change. We knew that the days of being able to sell a pound of flour in Massachusetts for $4,000 really was rented space. You were lucky to be a first mover, but over time there would be more and more product available. So then the question becomes, all right, how do you protect against the wholesale volatility at that point?
Right.
And I think the challenge you've seen with most MSOs and their own brands is, number one, they don't have a big enough retail footprint to really compete because half of the people they want to sell to are their competitors who are trying to build their own brands. So they're getting into this back and forth. And the big brands, really, no Coke and no Pepsi have stepped forward because they don't have a distribution platform. Typically, a brand has only a few choices. Either sell yourself to an MSO, become captive to the MSO, partner with them, but only in their stores, right? So someone like Tilt really didn't exist until about a year and a half, 2 years ago that said, look, I'll treat your brand like my brand. All I ask is you do that in-store activation, you do the marketing, and you help build out the brand. We'll do the rest. And if you do it right, you should maintain your position in the market. If you were able to succeed in California or Colorado or Washington State, you should be able to easily succeed here on the East Coast. And while we'll share some of the economics, so you talk about profitability, our feeling is we'll have a smaller piece, but of a bigger pie that's more stable. And I think the early results that we saw in 2022 is while the rest of Massachusetts, for example, had this decline in both wholesale and retail prices, the prices of all of our brand partner products was flat, stayed steady the
Yeah.
whole way through, which is exactly
Okay.
what we wanted.
Do you think we see a big trend of like West Coast products continue to filter more and more into like, a lot of the Midwest and East Coast markets?
I think there's a desire to. I mean, everybody saw the cookies move, right? And in some instances it was done well, in some instances it wasn't. They've gotten much better now to really be smart about how to make sure the brand name is more than just a name and a logo, but that you're making sure the quality is the same. Because that was always the
Yeah.
knock on those early movers, that the quality on the East was so different from what you experienced out West.
Yeah.
The question is who can actually deliver, and I think that's the one piece that when I talk to a lot of other MSOs, they say, well, how do you guys do it? And it really is being selfless. We don't really, we care about our house brand, but we don't really care about it, right? It's there to fill in the gaps. It's there to provide maybe for the things that fall outside of the SOPs, or maybe the one-offs that some of the brand partners don't carry. That's what it's there for, to round out the portfolio. But when push comes to shove, even if it's the end of the month or the end of the quarter and we're chasing margin like everybody does, I'm going to lean into those brands that are selling the most and doing the best. And that's how
Which,
I'll allocate my biomass. That's how I'll allocate my personnel. I think
yeah.
most of the other MSOs, they always recoil and they do what they do best. They start making their own product because they convince themselves their margins are better. Problem is
You,
they discount. So it's not really better.
yeah. You said that you came onto the scene in 2020. What's your background?
So prior to this, I was with another MSO, Columbia Care. I helped take them public, and I really credit Nick Vita and that team with getting me into the cannabis space. Prior to that, I was in life sciences. I had spent 16 years in finance, and then also spent some time with casino gaming and equipment. And all the companies I worked for all had one common theme. They were either new disruptive entities into either existing markets that were very deep, but they were doing something a different way, or they were in an existing market already public and going through some kind of transformation. So there was always a story to be told, a pivot to be had. So when cannabis sort of came onto my radar screen, some friends had said, wow, this is a great way to sort of have a career arc. It was interesting to me. It looked like so much money had been advanced, but so little had been done with that money in terms of building businesses to last. Lots of revenue generation, not a lot of profitability.
Yeah.
And I think that's what made it so interesting. And look, I credit Columbia Care to showing me that you can be pragmatic. It didn't just have to be all about flashy headlines and lots
Yeah.
of top line revenue. So,
Yeah. Well, with your financial background, let's talk about recent news. Back earlier this month, you announced a series of transactions that basically alleviated near-term debt maturity and reduced your non-revolving debt to US $46 million, down from $86.7 million in December of 2021. So aside from the intermediate term of relief on debt service agreements, what benefits does this have, or does this move have, and why should interest investors care?
we started last year. So around this time last year, we probably had almost $90 million of total debt. And it was really two tranches of debt. Low price was at 8%. So it
Yeah.
wasn't really burning a hole in our pocket. And we had some AP that also went along with that. So we knew that we had a maturity stack coming up in November, another one coming up this April. We knew we wanted to do something with the AP. And the question was, how do we get ourselves on stable footing? Because a lot of the things we were looking at, whether it's M&A or potential expansion, you really want to know what your capital structure is and have that nice firm footing where it's predictable. You don't have any maturities that you're worried about. You don't have crazy terms that just bleed all the cash out. So we started this process, back in probably November 2021 to start looking at what to do with our maturities and our capital structure. And we knew in cannabis it's going to be a mosaic. There is no one. I can't go to the junk bond market and just go raise debt like I used to do
Yeah.
on casino gaming or things like that. So we started down the path. We did some sale leasebacks. We had a couple of pieces of property there. We also were able to raise some capital, just from cash flow from operations. It's one of the benefits of being one of the few companies operating solely off of cash flow from operations since 2019. And then working with existing investors. We had a pool of investors on both sides who really were interested in the business and felt that while the macroeconomic conditions and certainly the cannabis market is challenging right now, they still see the value and they like the story that we've told. They like the pivot we've made, and they want to give us time.
It's why investors are still here. It's why investors are still here, right?
Exactly. So they were willing to step up and really put together I would think, at or even below market deal out there. I mean, I think right now our cost of capital was somewhere around 16, 17%, no discounts or anything like that. Came with warrant coverage, but we already had 62 million warrants that had expired when we retired the senior notes. So we just sort of repurposed those and added about 30 million more.
Gotcha.
So we kept the dilution to a minimum and ended up with a really nice capital stack that I think, for a company our size, we technically raised debt in excess of our market cap. And that doesn't happen very often, let alone in cannabis.
Well, especially in this day and age too, right?
Yep.
Last month, interesting news. You were appointed to the board of directors of the National Cannabis Roundtable, otherwise known as the NCR. It's a nonpartisan alliance of cannabis companies and services working to advance cannabis policy in the United States, for all my viewers that want to know more about it. So what would you say are the important initiatives right now that the NCR is doing when it comes to advancing policy in Washington?
That's a great question.
Just putting you on the spot.
No, when we're looking at the different organizations to become a part of, that was one of the things that sort of sang out to me, like who's advancing the ball in a way that makes a lot of sense, because you're not seeing a lot of change right away, but are you in the room? Are you gaining traction? And it felt like NCR definitely was doing that. Now they're sort of hitting a little bit of a reboot in the sense that with the change of the landscape a little bit in both the Senate and the House, they are sort of finding their way again. But in terms of the initiatives they have forward there, I don't want to get too far over my skis on that front. But I think they tend to look at things more holistically. They look at how the pieces fit together. And more importantly, what I like is they understand the strategy of how to move these things through. It's not just about the headline. It's about where we can get the most traction. And at the end of the day, what are the unintended consequences? And I think that's one of the pieces. I've sat on 2 of the briefings so far. And that team thinks everything through, to the nth degree. Even something as basic as descheduling, right? Everyone says we have to get it descheduled, but if you go from Schedule 1 to Schedule 2 or Schedule 3, you didn't really gain a whole heck of a lot, right?
Why
But
is
you
that?
also know you're probably not going to get it. What's that?
Why is that? When you say from Schedule 1, 2, or 3, you haven't gained very much.
So in terms of what are you looking to do? If you're looking for full legalization, right, you're still not going to get there with those scheduling. Now, that said, you're not going to get all the way off schedule either, because I think you're still going to have some basic hurdles. And who's going to regulate you on the other side? You want to bring the FDA in? Well, they just punted on all things, CBD. So I think from that perspective, you have to be careful what you wish for and think through, should we be spending time showing them why we want to be more like a Schedule 4, Schedule 5? And there are 280E implications. There's a whole bunch of different implications that you can do a whole podcast on separately. And I think those are the pieces that, I believe NCR does a really good job navigating and really staying as Switzerland as you can down the center of the fairway.
Why do you think, just so people understand you and your role and the importance that you represent in the industry, why you were appointed to the board of directors?
That's a great question. I think from that perspective, for us, we were excited to be a part of the conversation. Certainly, we've been very vocal on the social equity front. I think that gives us a little bit of a different angle than most of the other shops out there, that we have put significant capital at risk and are approaching cannabis from a completely different viewpoint than a typical MSO who might just be more worried about their own bottom line. I think that kind of gave us a little bit of a line of sight on a radar screen there and brought us into the conversation. And now that we're there, I think it's exciting what we'll be able to do. So I'm looking forward to getting more engaged. Again, it's only been a few months, but I'm excited for what we can do there.
Yeah, and I think I wanted to ask you this question, what you think of the overall state of federal cannabis reform in the U.S. I think, as you're saying and what you're kind of outlining here today, is that people are being less concerned about the macro events. Like, some things just can't be controlled right now. But there are a lot of good stories, and this doesn't necessarily have to fixate on the big MSOs. A lot of smaller companies continue to execute, continue to build market share, turning profitability as well. I think that's where a lot of investors are focusing primarily on moving forward. Do you not think?
I think they have to. I mean, the hard part is, the way the market's been set up and not being able to get true institutional investors into the mix, we're missing the people we need, right? Ultimately, you need a high growth style equity investor, someone who understands a 3 to 5 year horizon and having to reinvest in the business. Unfortunately, they're blocked from really being able to buy. Either they can't get the shares custodied, they don't really trade up on Canadian exchanges, and they won't trade on the OTC for whatever their reasons. So as a result, getting investors to really focus on the things that group does, not even thinking twice about it. Profitability, what do your margins look like? What do the trends look like? What's your throughput and your productivity? It's not just about top end growth. And, jokingly we said, who'd have thought? But these are what people should have been focused on all along, not just the headlines anymore, because the headlines don't do anything for you. We've seen a lot of companies create a lot of revenue and continue to lose money and burn it. It is hard. You're bringing together agriculture, which is difficult. You're bringing together specialty manufacturing and ultimately specialty retail and distribution. Any one of those is a difficult thing to do. And you're doing it without the benefit of regulatory backing. So you can't just create that efficient hub and spoke where I can put all my agriculture where the climate is temperate and I have all my manufacturing where transportation is plentiful. I'm running independent businesses in independent states.
Yep, that's for sure. Look at the news. Was it last week or 2 weeks ago? The latest earnings from the darling of the space at one time, Canopy Growth. The layoffs that were happening, and I think they've been down 11 or 12 quarters in a row now. But times have changed definitely. Anything notable that you think could pass here in 2023 when it comes to the Washington landscape?
I think the NCR team still has their hopes on the safe side, that there'll be something from safe banking. I think it just is a question of what it's ultimately going to look like.
Yeah.
But I think people are seeing, and look, it doesn't hurt that every time they shoot down safe, another MSO comes out and shows the access to capital they have at low rates. There's been 2 or 3 of them now where it's just like, okay, you keep saying that safe is only going to help the big guys. And every time you shoot down safe, another big guy shows you they have access to capital. I think it's hurting the people they're trying to help the most.
Absolutely.
So I'm hoping that gets some kind of rational behavior. But the one thing I think we're all in agreement on, it's going to be incremental. There's no silver bullet. And what's refreshing is it looks like the people who were holding out for the silver bullets in the Senate are realizing that, perfection is the enemy of progress. So I think Cory Booker wishes he had a do-over. On
you
that
think?
I'm going to stand in front,
I would hope for his sanity he would think that way. What a ride that's been, that's for sure. But last thing I'll leave then. Great story so far with some of the information that you've been sharing. But if you're speaking to a group of investors and you talk about growth strategy here in 2023, what would you communicate to them?
I think looking for interesting partnerships would be great for Tilt. I mean, certainly what we're doing with the Shinnecock, right? Building out that dispensary in New York without having to spend all the kind of crazy money just for the right to get into New York. Most of the folks have spent millions of dollars just for the right to build. We spent about $700,000, and we're building.
Wow.
I think the walls are going up right now on the dispensary on Montauk Highway out in Southampton, and we'll get some processing and cultivation next. So I think looking for unique ways to expand. I think safe banking being shot down has created some opportunities for smaller companies that maybe shouldn't be public to combine with us. The company's probably too small to be on the radar screen of the big guys. And for us, I think being tactical, we've created this Northeast corridor that, if we ever do get full legalization or at least interstate commerce, we can serve half the country from a group of assets within a few hundred miles of each other. Wow. I'd love to keep building off of that.
Great strategy.
Yeah.
Well, listen, I appreciate the update. This is great. Glad to see that you're on the NCR board too. We got to pick your brain on just opening trends and have you on more and more, but appreciate the feedback, and please, let's keep in touch.
Absolutely. Absolutely. Be happy to do it.
All right. Thanks, Gary. Appreciate your time.
Take care.
Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.